Sometimes when I'm discussing life insurance with a client, they'll say something like, well, I think I'll just go down to the funeral home and start making payments on a prepaid funeral. And that's honestly, it's not a bad idea. But I want you to, before you do something like that, I want you to consider one thing, because there's something very, very important here, and I think it will prove a point. So we're gonna compare the two different options, a prepaid funeral versus life insurance. And I've actually had this happen. I'll explain in just a moment. So for the sake of this illustration, let's say that we're going to do $10,000, because that's about the average cost of a funeral, kind of on the low end today. And we're going to say that we're going to invest $50 per month. One of two ways. We're either going to pay $50 a month to a funeral home, or we're going to put it into life insurance. I'm going to show you what the difference is. So if you put $50 a month, you start making payments, assuming that you're not going to prepay for the whole thing, but you're going to make $50 a month payments to a funeral home. In month one, you give the funeral home $50. In month two, you give them another 50. So now you're at 100. Month three, you're now at 150 because you're paying $50 every month. So at the end of 12 months, what have you paid the funeral home? $50 times 12 months, that's $600. Now let's take a look at the other example. Actually, let me just back up a little bit. So what happens if you're going this route and the funeral is $10,000 and you give the funeral home $600 and you die after 12 months, after starting this for 12 months? You paid it for 12 months, funeral home gets $600, about enough to cover the spray on top of the casket, right? It's not very much. Now somebody's on the hook for around $9,000. So that's how that would work in that situation. The other option, life insurance policy, you do the same thing, but instead of giving it to the funeral home, you're giving it to an insurance company, and you're guaranteeing a life insurance policy. So in month one, it's the same math. It's $50 in the first month, $100 you give them in the second month, and in the third month, et cetera, et cetera. So it's the exact same math, but at the end of any month, after month one, if everything was done properly, you have a $10,000 payout. Think about that for just a minute. So if you make one payment and you get a $10,000 payout, that would be very unfortunate, but it would be on the right side of the math, certainly. And I said I've had this happen. I actually had this happen to 3 different people in a 2-year period, where they had made 1 or 2 payments on a life insurance policy, and then something happened. One was natural causes, one was an accident, and the third one was a cancer diagnosis, and the gentleman went very quickly. He was gone inside of 60 days, but he had purchased a $40,000 life insurance policy. That was a good trade. It wasn't a good trade in terms of his life. I wish I wouldn't have said that, but mathematically, he made 2 payments on this policy, and his brother got a $40,000 payout. So the math works if everything is done properly and nobody tried to get anything over on the life insurance company. You answer the questions honestly. You make 1 payment, 2 payments, 12 months, it doesn't matter. That payout is going to be there because it's guaranteed. So what would it look like if you're making payments to the funeral home? At $50 a month, how long would it take to save $10,000 or to have paid into the funeral home to achieve $10,000? You're probably already doing the math in your head. I'll save you the time. 16 years and 8 months. You tell me which one makes more sense.